Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. The pattern construction that led to the market moving higher started in between mid-March to early May. The dark blue highlighted bullish shift pitchfork. The market is right now in between the overhead middle tie and above, currently 255 3/4, and the lower time below, currently at 226.40. Over the beginning of August, we saw the congestion below being tested and penetrated between 229.15 to 230.10, containing the October high at 229.15. Now prices went on lower down to test the 224.40 to 226.45 congestion zone, containing the recent May to August 50% Fibonacci line at 225.70. However, prices did not like it down there, and in the first full week of August, the market made a significant weekly key reversal higher that set up prices to reach their recent high 2 weeks ago, almost up to the February 2022 high at 259.40. These actions allowed me to draw a bright red uptrend, currently at 230.90, accompanied as it has been until recently by the medium moving average, currently at 228.80. The importance of the bright red uptrend is because it is also part of another pattern, also highlighted with a higher bright red trend line, currently at 262 even. One which evolved from my drawing a pattern 5 weeks ago. Originally, these two trend lines formed a bright red expanding wedge pattern. However, I have since finessed and morphed this pattern into what we have now, a larger ascending wedge pattern, currently 230.90 to 262 even. At the same time, the bullish action from early August allowed me to draw a new, more acute purple ascending wedge pattern, currently 251 even to 267.90, one which we have seen the market punch down through last week. So you can see what I wanted to highlight was how this was and is all patterns within patterns within patterns. After the recent break below the purple ascending wedge pattern, the next one being tested late last week and again acting as a base today is the slowly rising green short medium moving average, currently at 237 3/4. If this support is broken, then the bright red uptrend will be next to be tested, and I'd throw in the lower dark blue tine as well. So caution, and watch out how far prices manage to penetrate lower. Otherwise, the bright red large ascending wedge pattern and the associated dark blue bullish shift pitchfork will guide this market higher, if perhaps in maybe narrower ranges. London coffee. Prices made a peak in late April and the low in early May that set up the opportunity for me to draw 11 weeks ago a bullish Andrews pitchfork with a late February to early May action. 5 weeks ago, because of market actions, I finessed this into a shallower dark blue highlighted bullish shift pitchfork for the same move. We did see the top side upper time, currently at 48.84, tested in mid-July, but it held, and then again last week, where it was penetrated, breached even, but we are back right now under the dark blue upper time, and today between there and the July high below at 46.81. Within, for the most part, this dark blue bullish shift pitchfork, another pattern has emerged, highlighted in bright red. A late April to date, quite large ascending wedge pattern, currently 41.86 to 49.46. The lower uptrend is further reinforced by the rising medium moving average, currently 41.92, and the upper trend line has the benefit of being just above the dark blue upper time. A significant feature in the very recent action has been the weekly key reversal up seen in the first full week of August. This led to the creation of yet another pattern, an August-based purple highlighted bull channel, which in turn led to another pattern, a monthly key reversal up we saw in August. Thus you can see there is a lot concentrated in that 46.82 to 51.48 area, and recent action has contributed and at the same time tested some significant levels. 2 weeks ago, prices broke up through 3 highlighted resistances, managing to close above the bright red upper trend line and the upper time, but last week we have seen prices retreat lower, punching down through all 3 supports, dropping as far as the July high. I suspected last week that the purple bull channel was close to the end of its life, and nothing has happened since has changed my mind. But last week I was not so sure about the bright red upper trend line or the dark blue upper time. For the moment, it looks like they may still be intact or repaired as overhead resistances. As I said last week, and I quote, "Ideally, consecutive closes below the July high may well relieve the very recent bullish pressures, but we're too close to the breached upper resistances to see that just yet. And I'm wondering if all we are doing today is just tempering the bullish pressures, not halting them." End of quote. Because of the somewhat extensive time taken where we have been, not really trying higher or really lower, I'm minded to view that perhaps the top side is now limited, but I'll reserve my opinion fully until I see a more sincere direction in the very short-term moves of this market.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.
Thank you.